Welcome to the Deep Dive. Today we're going to be looking at MSCI.
Oh, yeah.
They're a company that helps investors make decisions. Think of them like the architects of the financial world.
It's a great analogy.
We've got company summaries, earnings reports, insider trading info,
All the good stuff.
even opinions from those Wall Street oracles, the analysts.
They can be a bit cryptic sometimes.
That they can.
But we're going to try to decode all of that today.
So what's so fascinating about MSCI? They don't just crunch numbers, do they?
Oh, absolutely not. They wield considerable influence in the market. We'll be dissecting their business model, their recent performance, and their bold foray into the world of ESG and climate investing.
Which is very hot right now.
Very hot topic. By the end of this deep dive, you'll have the insights you need to make your own informed decision on whether MSCI is a stock worth watching.
So what exactly does MSCI do? I mean, from the reports, it looks like they offer a whole suite of tools.
It's a lot.
From creating indexes to assessing risk.
Yeah, you hit the nail on the head. They're a bit like a financial supermarket. Their bread and butter are indexes.
Like the S&P 500.
Think of them like the S&P 500, but for all sorts of assets.
Okay.
But they've also got aisles dedicated to risk analysis.
Okay.
And increasingly that organic free-range section that everyone's talking about.
What's up at?
ESG and climate data.
So it seems like they've got their fingers on a lot of pies.
They do.
What makes them stand out from the competition? What's their special sauce?
One key factor is what's called a wide economic moat.
That sounds impressive.
Which essentially means they have a strong competitive advantage.
Okay.
Their brand is well respected. Their systems are complex, which makes it difficult for clients to switch.
Yeah, I bet.
And their indices are so widely used that it creates a network effect.
Okay.
Think of it like this. If everyone's using Google for search,
Yeah.
it's tough for a competitor to come in and steal market share.
Makes sense. So a bit like that feeling you get when you try to switch phone operating systems.
Exactly.
It's doable,
Yeah.
but it's a pain.
Big pain.
Let's talk about their financial performance.
Yeah.
Their latest earnings report looks pretty impressive, wouldn't you say?
Indeed, the recent earnings report paints a rather rosy picture.
Okay.
We're talking nearly 10% organic revenue growth.
Wow.
Double-digit EPS growth.
Okay.
The kind of numbers that make investors reach for their checkbooks.
Those are some serious gains. What were some of the highlights from their earnings that really jumped out at you?
Well, their free cash flow jumped a whopping 21%.
21%.
Free cash flow is essentially the cash a company has left over after paying its bills and making necessary investments.
Got it.
A healthy free cash flow is a sign of financial strength and gives companies the flexibility to invest in future growth, pay dividends, or buy back shares.
So a high free cash flow means they have more options and theoretically can create more value for shareholders.
Exactly.
But are there any areas where they're facing challenges?
Well, while their financials are strong, there are some potential headwinds. Oh, no.
Expenses are projected to increase, particularly in the first quarter of 2025.
Yeah.
This is partly due to increased spending on things like employee compensation and software development. Additionally, there are some challenges in Europe.
Such as?
Specifically lingering pressure on active asset managers due to regulatory changes and cyclical market pressures.
It's always something, isn't it? So it's not all sunshine and rainbows.
No.
There are some areas of concern that investors need to be aware of.
For sure.
But let's shift gears for a moment and talk about ESG and climate investing. It seems like MSCI is making a big push in this area.
Absolutely. This is a key area for MSCI. They're attracting billions in climate-related ETF investments.
Wow.
And are integrating AI into their data operations to develop cutting-edge products.
AI climate ETFs. It sounds like they're positioning themselves at the forefront of a major trend. What specific steps are they taking to solidify their leadership in this space? They're actively developing new products like private asset benchmarks and indices that incorporate ESG factors.
Yeah, okay.
They're also bullish on the long-term demand for ESG products, particularly in Europe.
Interesting. But you mentioned earlier that there are some regulatory challenges in Europe.
Right.
How are they navigating that complexity while remaining optimistic about the future of ESG investing in the region?
They acknowledge that regulatory adjustments are needed for the ESG market to fully mature.
Okay.
However, they're confident in their ability to adapt and believe their offerings are well-positioned to meet the evolving needs of investors who are increasingly seeking sustainable investment options.
So they're playing the long game.
They are.
But let's get to the heart of the matter. Should you, dear listener, consider buying MSCI stock? To help us answer that question, we've gathered a range of analyst opinions.
And as you might expect, there's a bit of a mixed bag here.
Oh, really?
Some analysts are shouting buy from the rooftops,
Okay.
while others are taking a more cautious hold approach.
So the experts aren't entirely on the same page.
It seems not.
What's the average price target from the analysts who have weighed in on MSCI recently?
The average price target is $654.40,
Okay.
which is significantly higher than the current market price. Some analysts like Goldman Sachs are even more optimistic,
Right.
seeing strong growth potential in MSCI's business, particularly in areas like ESG and climate investing,
Yeah.
index licensing, and analytics.
Mm-hmm.
They recently upgraded MSCI to a buy rating.
That's certainly encouraging.
Mm-hmm.
But we also have to consider the recent investigation notice regarding potential securities law violations.
Right.
This stems from their reported fall in Q4 profit due to increased operating expenses and spending on employee incentives and compensation.
Yeah.
How should investors interpret this development?
It's definitely something to keep an eye on.
For sure.
While we don't have all the details yet, it highlights the importance of considering all available information, including potential risks,
of course.
before making any investment decisions.
So it's a classic risk-reward scenario. Now that we've laid the groundwork,
Yeah.
let's roll up our sleeves and get into the nitty-gritty
Let's do it.
of their recent earnings report.
Yeah.
I'm so curious about how their different business segments are performing.
Mm-hmm.
Did any of them really stand out?
Well, it's like opening a treasure chest filled with financial data, isn't it?
I like the sound of that.
And yes, some segments definitely sparkle more than others. One that caught my eye was their wealth management division.
Wealth management.
Mm-hmm.
Now that sounds intriguing. Can you break down what that entails
Sure.
and how MSCI is playing in that space?
Think of wealth management as providing sophisticated investment services for those who have a bit more to invest,
Okay.
high net worth individuals and families.
So the fancy folks.
Exactly.
Yeah.
And MSCI is making some serious headway here.
Okay.
In the last quarter of 2024, their wealth management subscriptions grew at a rate of 12%, reaching a total of $116 million.
That's a significant chunk of change.
It is indeed.
What's driving that kind of growth?
Well,
Is it simply a case of the rich getting richer,
could be part of it.
or is there more to the story?
There's definitely a growing demand for sophisticated investment tools among wealth managers.
Right.
They need more than just basic pie charts and spreadsheets.
And you said they're a little more high-tech.
Exactly.
Okay.
MSCI is stepping in to fill that need with tools for portfolio construction, risk management,
Okay.
ESG integration, and even something called direct indexing.
Direct indexing.
Yeah.
I've heard the term, but can you refresh my memory on what that is exactly?
Imagine creating your own personalized index fund.
Right.
Instead of buying a traditional index fund that tracks a broad market index like the S&P 500,
Yeah.
direct indexing allows investors to cherry-pick individual stocks
Okay.
to build a custom portfolio aligned with their specific goals and values.
So you're essentially creating a mini S&P 500 tailored to your own preferences.
You got it.
That sounds pretty powerful.
It's a growing trend among wealth managers.
Makes sense.
And as you might expect, MSCI is a leading provider of direct indexing solutions.
Of course they are.
Their assets under management in direct indexing have increased a whopping 31% to nearly $130 billion.
Those numbers speak for themselves. Wealth management is clearly a winning segment for MSCI.
It is.
What other areas are showing strong performance?
Their fixed income segment is another standout.
Fixed income.
Mm-hmm.
Tell me more.
They reported a 15% growth rate in fixed income,
Okay.
reaching $104 million.
Nice.
This growth was fueled by strong demand for their fixed income ETFs.
ETFs.
Yeah, and some significant client wins.
What kind of clients are we talking about here?
Well,
Are they primarily serving individual investors, or are the larger institutions also in the mix?
it's a mix of both.
Okay.
And some of their recent wins point to their growing influence.
Well,
They secured a large deal for their portfolio management analytics tools,
okay.
and even snagged a first-of-its-kind contract with a federal government entity.
A government contract.
Yeah.
That's a big deal. It sounds like a vote of confidence in MSCI's capabilities.
Absolutely.
So we've got strong growth in wealth management, a booming fixed income segment,
Yeah,
and a stamp of approval from the government.
it's all good.
What about their core index business?
Yeah,
Is that still a major revenue driver?
absolutely. Their index business remains a cornerstone of their success. We're seeing continued strong demand for their climate-related investment products. And they reported a record-breaking $2.4 billion seeded investment in a new climate index ETF.
Climate index ETFs,
Yeah.
another example of them riding the ESG wave, it seems.
You're riding it.
But let's not forget about their analytics segment.
Right.
We touched upon it briefly earlier, but I'd love to hear more about how that part of their business is performing.
The analytics segment provides tools for risk management,
Okay.
performance attribution, and portfolio management.
Yeah.
They're seeing solid growth in this area with an organic subscription growth rate of around 7%.
7% growth. While not as flashy as some of their other segments, it's still a respectable number.
Yes.
Are there any challenges or headwinds they're facing in the analytics space?
It's worth noting that their revenue growth in analytics has lagged slightly behind their subscription growth rate.
Oh.
Due to the timing of some implementation-related revenue. This means that some of the revenue they've earned won't be recognized until those implementations are complete.
So more of a timing issue than a fundamental problem with the segment itself.
Precisely.
Okay.
The underlying demand for their analytics products remains strong, and they anticipate this timing issue to resolve itself in the short term.
Okay.
They've also noted strong momentum in fixed income and wealth management within their analytics segment,
Okay.
which is definitely encouraging.
So far, we've seen a lot of positive news about MSCI's earnings.
Mostly positive.
But no company is perfect.
No, they're not.
Are there any areas where they're struggling or facing headwinds?
You're right. There are always challenges.
Yeah.
Remember those headwinds we mentioned earlier, like
Right.
rising expenses and pressure on active asset managers in Europe?
Yeah.
Those are still factors to consider.
Yes, those are definitely on the radar.
Mm-hmm.
But did anything else stand out in the earnings report or transcript
Oh.
that gave you pause?
One segment that faced some difficulties was their real assets business.
Real assets.
Mm-hmm.
Could you remind our listeners what that segment encompasses?
Real assets primarily deals with investments in real estate and infrastructure.
Okay.
And it seems like this segment was hit by some external factors
Yeah.
that led to those cancellations.
So a bit of a bump in the road for their real assets business.
It seems so.
Were there any bright spots,
Well,
or was it all doom and gloom?
despite the cancellations, they did see improved new recurring subscription sales for their index intel product within the real assets segment.
Okay.
So while there are challenges, there are also signs of resilience.
That's good to hear. It sounds like a mixed bag for real assets.
So it's a bit of a mixed bag.
Any other areas that raise questions or concerns?
Another topic that garnered attention during the earnings call was the performance and growth timeline of their private capital solutions segment.
Now, private capital solutions sounds interesting.
Yeah.
What exactly does that involve?
It focuses on providing investment decision support tools for private capital,
Okay.
such as private equity and venture capital.
Okay.
It's a relatively new and growing segment for MSCI,
Mm-hmm.
but there's some uncertainty surrounding its pace of growth.
So investors are keen to understand how this segment is performing.
Yeah.
And when it will really take off.
When will it take off?
Did MSCI provide any clarity on that front?
They reported a respectable 15% growth rate,
Okay.
but also mentioned some volatility in new recurring sales.
Mm.
They haven't yet revised their previously stated growth target of mid to high teens to 20% revenue growth,
Okay.
which has left some investors wondering about the timeline for achieving those goals.
So a bit of a wait-and-see approach for private capital solutions.
I think so.
Any other key takeaways from the earnings report that we should highlight before we move on?
One topic that came up repeatedly during the earnings call was the role of AI in MSCI's business.
AI.
Hmm.
Investors are curious about how they are leveraging AI and what kind of impact it's having.
What's the impact?
AI is the hot topic these days, isn't it?
It is the hot topic.
It seems like every company is trying to figure out how to incorporate it.
Trying to figure it out.
What's MSCI's take on AI?
Yeah.
Are they jumping on the bandwagon, or are they taking a more measured approach?
They're definitely embracing AI,
Okay.
but in a very strategic way.
Okay, how so?
They're using it to improve cost efficiencies in their data operations,
Okay.
which essentially means reducing the time and money it takes to collect and process data.
That sounds like a smart use of AI.
It is.
Are they doing anything else with it besides streamlining their operations?
They're also leveraging AI to create new and improved products.
Such as?
For example, they're using AI to help identify thematic drivers for their indices and to generate AI-driven insights in the areas of climate and ESG.
So they're not just using AI for back office efficiency.
Right.
They're using it to create new products and insights that can benefit their clients. That's a key distinction.
It is.
Well, what about the financial impact of AI? Is it translating into higher profits or giving them more pricing power?
They don't expect AI to drive immediate pricing power,
Yep.
but they believe it will be a major source of innovation in the long run.
Okay.
They're making significant investments in AI research and development
Mm.
and see it as a game changer for their future success.
So they're playing the long game with AI.
Mm-hmm.
They see it as a transformative technology, not just a quick fix.
That's an insightful observation.
Thanks.
They view AI as a fundamental shift in how they operate and deliver value to their clients.
It's clear that MSCI is a dynamic company with a lot going on.
Oh, yeah, lots going on.
We've seen stellar performance in some segments, challenges in others,
Yeah.
and a strategic embrace of AI as a driver of future growth.
It's a fascinating company to watch.
And we've only scratched the surface.
Oh, yeah.
There's a wealth of information to explore in their earnings reports and other financial documents.
For sure.
I have to admit, it's a lot to process.
It is a lot.
How can our listeners make sense of all this information and decide whether MSCI is a good investment for them?
That's a great question, and it's one we'll tackle head-on in the final part of our MSCI deep dive.
Okay.
We'll distill all this information into key takeaways,
Sounds good.
discuss the potential risks and rewards, and provide you with some food for thought
Food for thought. I like it.
as you consider adding MSCI to your investment portfolio.
Sounds like a plan. See you back here soon for the grand finale of our MSCI adventure.
Don't miss it.
Welcome back to the deep dive for the final act of our MSCI saga. We've journeyed through their business model, their financials, and their strategic initiatives. Now, the moment of truth. Should you be adding MSCI to your investment portfolio?
The million-dollar question.
I know, right?
Let's rewind and recap our key takeaways before we make the call.
Sounds like a plan.
Yeah.
Remind us why MSCI is even on our radar in the first place.
Okay, so first and foremost, MSCI is a powerhouse in the investment decision support tools arena. They've built a wide economic moat, meaning they've got a significant edge over the competition.
Did we talk about that?
Their brand is strong, the products are sticky. Once you're in, it's tough to leave, and their network effects create a powerful pull.
They're like the financial equivalent of a comfy pair of slippers. Once you're in them, you're not going anywhere. But comfort aside, their financial performance seems to be anything but sluggish. What were some of the highlights we uncovered?
Well, their recent earnings were quite impressive. We saw strong revenue and earnings per share growth driven by solid performance across various segments, particularly wealth management and fixed income.
And they seem to be riding the ESG and climate investing wave with great success. They're attracting billions in climate-related investments and using AI to develop innovative products. It's like they're reading the tea leaves of the market and adapting accordingly.
Precisely. They're not just reacting to trends, they're actively shaping them. Their proactive approach to innovation, particularly with AI integration, is a key indicator of their commitment to staying ahead of the curve.
So they're not just sitting on their laurels counting their cash, but every rose has its thorns. What are some of the risks investors should be aware of?
You're absolutely right. There are always potential headwinds. We discussed their rising expenses, the pressure on active asset managers in Europe, and the volatility in their real assets segment.
And we can't forget that ongoing investigation into potential securities law violations.
Yeah, that's a big one.
It's a reminder that even seemingly strong companies can face unexpected challenges.
Absolutely. Investing is inherently about weighing potential rewards against potential risks.
So how do we tilt the scales? What should our listeners be thinking about as they weigh their options with MSCI?
Okay, so firstly, take a good hard look at your own investment goals and risk tolerance. Are you in it for the long haul, seeking growth, even if it means weathering some storms? Or do you prefer a smoother ride, prioritizing stability and dividends?
Right. Different investors have different needs.
Exactly. MSCI's growth potential is attractive, but it's important to acknowledge the inherent risks associated with a company operating in a dynamic and evolving industry.
It's like choosing between a roller coaster and a scenic train ride. Both can be enjoyable, but they offer very different experiences. What other factors should investors consider?
Don't just take our word for it. Dig deeper. Do your own research. Dive into their financial reports, see what the analysts are saying, and stay informed about industry trends and regulations. The more you know, the better equipped you'll be to make a well-informed decision.
Knowledge is power, especially when it comes to investing. Any final words of wisdom for our listeners?
Think about the bigger picture. Don't just view MSCI in isolation. Consider how it fits into your overall investment strategy. How does it compare to its competitors? Are there alternative investments that might align better with your goals? Taking a holistic view is essential for making strategic decisions.
So zoom out, see the whole landscape, and make sure MSCI fits into your personal investment puzzle. Excellent advice. Well, dear listeners, we've reached the end of our deep dive into the world of MSCI. We've armed you with the knowledge. Now it's time to make your own informed decision.
And if this deep dive has sparked your interest in exploring the financial world, don't forget to hit that subscribe button and the bell icon to stay tuned for more insightful deep dives. We'll continue to explore the fascinating world of business technology and beyond, providing you with the knowledge you need to navigate the ever-changing landscape.
Until next time, happy investing and may your portfolios flourish.